Well, what's going on, everybody? What a crazy week for me. It was a very much like a roller coaster. I made a few mistakes. Was in a day trade where the internet cut out on me and I couldn't stop out where I wanted to. And that also affected my small account challenge type of thing. But I'll go over that whenever I do that video. But ultimately, out of the losses I got on this day or those 2 days, kind of made it up here because over here I lost somewhere around three. Hold on a second. Let me fix that. Somewhere around 3K. Then I was able to make up some of it over here, obviously around 2K. But, anyways, ended the week minus $1,084. And honestly, it should have been a green week, but I'll go over the trades and show what happened. If you remember the pre-market prep and not the pre-market prep, sorry, but the weekend prep review from last week, where I went over and I discovered that I over position sized for that unbalanced fly in the spy. Yeah, that's how I got that loss right there, because the market went down and shot right up. But it's very interesting. But we'll go ahead and go over our trades, and then I'll go over the setups I'm looking at going into next week, how the sectors are acting, and what exactly I'm looking for. So on Monday, if you've seen a few of my videos, you know I've mentioned how I want to add 0 days to expiration trades to my trading plan. Well, as whoops, let me reset. So as it says right there, I did a 37.65, 37.70 per call. Basically, what that means is I was expecting price to stay below 37.65. And ultimately, after commissions and whatnot, I ended up losing $821. And I wanted to only lose $500, but that didn't happen. But like it says right here, I sold outside of the resistance and the Fibonacci level. I'll go ahead and come on, dude. Okay, there we go. Let me zoom this up right here. Okay. Now, all right, so this is when the market was going down. It was testing resistance, and I was thinking it was going to break above it. So here is that resistance line. So it came up, came down, and it hit here. I was thinking, okay. And market internals is telling me it may roll back down. I entered, like I said, on this candle, but I sold, like I said, at 365, which is this blue line right here. So I was thinking, I even gave it a little wiggle room, because there's this resistance line, the Fibonacci level that may hold it down just in case. And then so in this zone, if price started getting up above there, I wanted to cut my loser and get out. Well, due to the glorious location where I'm at right now, internet decided to go down. The internet cut out for about, I don't even know how long, 30 minutes? It took forever until it finally turned on. And once it did, I was able to cut the trade for a loss. And that was extremely frustrating, and it really made me double think about doing 0 days to expiration trades. So I'm more than likely not going to be doing them anymore, because I would hate for that to happen again. It's not worth it. I'll just stick to my swing trading the way I've been doing it, and see, and just move on from there, because that was not fun to deal with. See, entered here, and then finally got on and got out right here for a loss. Yeah, not fun, but it is what it is. It happened. So I'll bounce back. All right. Now, the unbalanced fly that I put on, I was like, all right. I thought I was a genius for doing this one. Okay, so the reason I entered the trade, obviously right here, it says everything right there. So we were going higher. This is when the whole GameStop crap comes out. See the volume dots right there. So we came down, we bounced back up, got rejected. That pinning bar. I was like, all right, it's going to keep going down. More volume on the downside. So I was all right, we might just keep going down. And then we're getting all these sell signals down here on the daily. And I didn't expect it to go for too long. That's why I did 7 days till expiration. Just enough to catch a little flush down and then get out. You see it's coming down, and it even closed below the 50 SMA, which is a big level that I watch for. So another thing telling me that we have more downside. Close below the 50 SMA, which is this blue line that's right there. And then, like it says right here, what I was thinking is we close below the 8 EMA. It's opening the door to go down to the 21 on the weekly time frame. Momentum was dying right here after hitting this 1618 level. The 4-hour squeeze is firing short, as it is showing right here. So that's the reason why I was thinking more downside. And so the way I put my orders in, so this is where the mistake happened, and I should have honestly closed it, but I didn't. So go right here up. This is the entry window. So I use Thinkorswim for my charting, and then I put my trades into Interactive Brokers. So when I put my trade together on Thinkorswim, this was actually 5.15, and then so 5.10, or is it 5.15, and then 10. But I actually tripled it. Whenever I went to put my order in, I put in 15 and thinking it was going to go off of this for some reason. I don't know why I thought that. I really don't. But ultimately, it gave me, I was 3 times larger than I wanted to be. It wasn't too bad of a loss. I mean, even max loss was a little over 5%. So I had 6% total capital in it. And yeah, as you know, it, we look right here at the 30-minute chart. Where are we at? I got in right here thinking we're going to stay down, and nope. I took the loss right there as we gapped up. And all I needed it to do, like the reason that I did the strikes the way I did, so go to the daily chart here. I positioned it to where break even was above the 20 SMA, slightly above the 20 SMA. So if we sold down, we came up, I was expecting it hit the 21 EMA and maybe go back down and test support again down at these levels just before we confirm high. I wasn't expecting a V bottom. I was thinking more potentially of a W bottom, but that did not happen. And it was a hedge. I only had one long position and one short. And so yeah, ended up taking a loss on that. So, lesson learned in this loss was if I overposition size on an accident, go ahead and close the position or close what you're not supposed to have. I think I saw greed because there's a high probability if it wouldn't get above the 21 EMA to make 65% on the capital. I was like, oh, yeah, that's an easy 65%. I'll take it. Obviously, I got punished. So that's what it is. So yeah, don't be like me. And Wednesday, I don't think I closed any trades. Okay, I only opened these trades, and what I'm going to do is I'm only going to cover trades that I closed because guess what? Next week when I close these, we'll go over these trades. So no reason to double tap the trades as of right now. All right, square. Well, hold on. Yeah, sorry for the quick change there. I actually just talked for like 5 minutes about this trade without realizing I pressed the record button. But I'll do it again really fast to cover this trade again, and hopefully this makes sense, and then I'll be done with it. So this is that Amazon trade still. I just pulled up my chart so you can see what I was doing. So here's the wedge. I got in around here. Once I saw it was forming the wedge, I got out, did a put credit spread, and then once it broke the support level right here on that candle, I closed the position and thought, well, at least it's just a kind of a scratch, small winner of a trade, and now I don't have to worry about it. Right now, it's frustrating in hindsight, obviously, because I could have easily just kept going. But in hindsight, it's frustrating that it was just a test of VWAP before it took off higher. But lesson learned, I'm probably be taking 0 DTEs out of my trading plan for now. Because you're basically pinning the top or bottom of the day. I don't know. I may just leave them alone for a little bit. All right. So, yeah. Enter Texas Instruments and, okay, Alta. So it was a 9 days to expiration, bull call spread, or 290, 300 bull call spread for 445. So I found it when I scanned for the arrows, and then I entered on this candle, targeting the 76 fib level. As you can see, it went up there, and as it kept tapping it, I just closed the position for about 60% profit. And the reason for entering was green 10x bars on larger time frames. It hit support, and this candle is confirming a bounce. And I entered right here, hoping for a higher move. And the reason I entered on that candle, because when you look at this, you're like, wow, that's extended. But I entered at the 21 EMA. And that is a good entrance spot. You can see here. Entered at the 21 EMA. 2 days later bounced, and I got out at 300. And then if you need a clear view, got in right here. I should have waited for the pullback. Could have got a better price, but oh well. And got up right there at that candle. And that's all it was. The reason I entered that, because green 10x bars on the larger time frames, pulled back to support, it's bouncing on above average volume, which I have blocked here, but I know it had it. And so that's why I entered that short-term trade. All right, so that's all the trades I did. Like I said, I am not happy with my performance. I've made a few mistakes, but it is what it is. I am human, and this is real money, not some paper trading account like you may see on some of your social media people, which is very frustrating. But anyways, all right, I'll pull up my Thinkorswim. We'll go over the prep for going into next week and what I'm looking for. So give me 1 second. All right, so I got the E-mini S&P futures up. This is what I use to evaluate market direction and what things are going to happen. But if we look at what happened last week, we obviously broke this high right here. Me personally, I want to be watching this level next to see what happens. Are we going to hit it, bounce back down? I know it's easy to think we're extended. Why don't we may come back down and test before going back up higher? I don't know, but if you look at the price action, like without being concerned, we closed above this high. We closed at the high of our candle. So it's fair to say that maybe this is the next price to watch, 39.16, to see what happens when we get there. So that's what I'm watching for the S&P 500 futures area, or the overall market, really. I use this to gauge the overall market. And look at the NASDAQ. It is not as explosive as the last, or as the S&P 500, but It did close at the high, but I don't like the candle as much as I do the other one. But we did close above it, so it's something to consider. But I don't think we're going to ramp up here. We may just consolidate up here for a little bit. I don't know. It's tough to say. And the Dow. The Dow did not break out. So I put this dotted line here because it's resistance, that line right there. It didn't break, so I think it may just be in this range for a little bit, maybe form an ascending triangle before it breaks out. We'll see. But definitely, if you're going to play any Dow Jones components in the stock market, I'd definitely say do it. Have a sideways element to it. And the last and not least is the rut. This one has broken out of that high and it's approaching that 1272 extension. So we got to see what happens there. So overall, the market is strong, as some are stronger than others. And I guess, so yeah, I'd say stay bullish. Last time I did this, I did it live so you can see how I do it. But instead of doing that this time and making the video so long, I already went ahead and did it. And here are the notes from it. You could look at it for however you wish to do it. The only thing I really need to talk about, as you can imagine, the overall market is breaking out. So basically all the other stocks go up. A rising tide lifts all boats. So mainly everything goes up with it. So that being said, everything with a 3 is just a bullish chart. It's breaking out of the highs like the futures or the index futures did, and they're going higher. Now, the only thing that was worth noting that I am going to show y'all because it stands out from what everything else is doing is the consumer staples, the industrials, and biotech. So I will go ahead and go over that real fast. So we'll do the consumer staples first. If I can. All right, consumer staples, the market is going up, but someone forgot to tell the consumer staples too. So the reason I am cautious on it, so there's the 50 SMA, it's below it. It is hitting this trend line that you could obviously see right here. So that tells me to be cautious with it. So it's rallying up to here. Is that going to be a good time to short it, to put it back down? And another reason that's something to consider is because consumer staples is considered a defensive sector. So when a strong market is happening, less people put things in consumer staples and they put them in consumer discretionary and tech and telecom and blah, blah, blah. This is more of like a dividend defensive base type of sector. But anyways, it's something to think about how it is not as strong as the others. So if you're looking for shorts, this is definitely a sector to be looking for. I did go looking for some. I didn't find any setups I like, but it's something to keep an eye on. And the other one I took notes of to write or tell y'all about was the XLI, the industrials. All right, so it is above the moving averages, right? They're all kind of clustered right here. It is rallying on low volume, but it is just in a range. Like there's nothing saying it's going to go higher yet. It's got to close above that line with above average volume to go higher. And as of right now, it does not look like it's going to do it. And the only other one was healthcare. All right, so this one is not as strong. And I was like, well, the biotech sector is like really strong. It's like if we'll compare these, so here's healthcare. I'll cover this real fast. So it does have a rise of 50, but it is below the 20. We did this dip, and it's kind of just hitting this 34 EMA. Like, is it going to take another leg lower, or is it going to swing back higher? Nonetheless, it is lagging as compared to the rest of the market, right? The rest of the market is taking off, and this is not. So relative weakness compared to the overall market. But if you look at biotech, it's taken off. So that had me wondering. I was like, well, what's going on? Where's the money flowing in and out? And I did a little bit of investigation, and this is what I found. So this is you could go to FinViz and use their screener or their groups, and you could break it down by industry. And so I went to the healthcare industry. So 1 day performance, I'm not going to really worry about it because that's just a 1 day thing. And I'll pay more attention to the weekly and month performance, like it has right there. So it's like, all right, so what is killing it? So what's holding down healthcare is apparently healthcare plans. I'm pretty sure this is a political thing. Who knows what they're talking about doing? And pharmaceutical retailers and drug manufacturers are the only things kind of lagging right there. Healthcare facilities going down right there, which I find kind of weird with the whole COVID pandemic thing. I thought maybe it'd be higher, but I imagine, I don't know. Don't get all political, but healthcare plans right there is obviously dragging down. So that is what's holding the healthcare sector kind of down right now, which is I found kind of interesting. But anyways, that's why I believe it is not taken off. But if you look up here as well, you can see like the biotech is still going strong. Medical devices. Oh, that's a day. So hold on. Forget everything I just said. Let's look further down. So from a month performance, it's good right here, but they just pulled back for the week. So no big deal. Biotech's always at the high, so that's good. Devices are still going good. Diagnostics, where are we at? Kind of just from a 1 week perspective. So this is why I look at the 1 month, because the money doesn't move in out over a 1 week or 1 day time frame. It's more of a month to 3 month time frame. But anyways, so that's my whole sector analysis. If you need it, and if you even care, here you go again. If you want to pause the video and write these down, but these are all the strongest to weakest sectors. I go from +3 to being the strongest to -3 being the weakest. And as you can imagine, for the most part, everything is up sideways and a few little bits that are kind of downish. All right, so now we'll go over some setups that I have found. I found a few that I really like, but a lot of them I need to wait for a dip. So like at the open, if the market dips, I will look at my watch list and look for the percentages that are dropping, or I'll filter it from the ones that are dropping and then look to see if I can enter any of them. But we'll do the green next first. All right, so my green X 10 bar setups, but waiting on a pullback. Here, we'll put on a 30-minute. So AZO, which is AutoZone. This is called a DMI explosion trade, is how it was worded by JC. But anyways, what's happening is we are getting a quick burst of they're just now turning green, right? Means momentum is starting to turn bullish, and the dots mean conviction, meaning volume. So they're coming in on a 30-minute chart, which doesn't happen all that often. So what I would like to see is we're coming up, so it's too extended for me. My entry point is always at the 21 EMA, which is right there. Every time. Green 10x bars of squeezes. That's where I'm entering. So I want to see it dip down, test this level, the 21 EMA or I won't settle for the 8 because I don't think the momentum is there. I usually use the 8 for a squeeze, but I wanted to test the 21, and if it does, that's when I'll enter the position for the upside. And if we're really needing targets, really, we can go here. Let's draw some fibs. All right, so I hit the 618 and failed. That's good for us, kind of, because what that means, what I'm hoping for is a dip down to like the come down touch here, and then but that day is going to close above the 50%, and then 2 days are going to close above the 618, and then we'll hit up here and I can get out of the trade. That's ideally I would like it to work, but I mean, we're playing probabilities. I don't know exactly what's going to happen. Also, you have the ready aim fire right there. So that's what I'm watching on AutoZone. What is going on? Airbnb. This one I may not get my entry, but I will be watching for it. So I'm not going to be chasing it. But if it can dip down back to here sometime, then I'll ride it to the upside. It doesn't have to happen next week. Just sometime. That's what I'll be looking for an entry until the setup changes. Or until a squeeze forms. There's another one, SunPower. Kind of upset that I missed this one last week, but it's right at the 21 EMA. Stopped at support. Lots of, like, when you see volume dots on day charts, that is something that does not happen often, especially on those up moves. I don't know if there was news or something. SunPower, they're into solar energy, right? That makes sense because that means, the whole election stuff, blah, blah, blah. So there you go. It definitely looks really good. I would like to buy somewhere near the 21 EMA and target the highs. And then over here on the 30-minute chart, we got the buy arrow. And if you don't know how the 10x bar strategy works, so it's coming down, right, went into support. You got your buy arrow, and what you do is that's when you enter to go long, and your stop's right here. So you have this little bitty stop for potential going all the way up here. That's how you pin reversals with this indicator. And I'll leave links in the description box below if you want to check it out at Simpler Trading. If you click the link, you get a discount on the 10x bars. They're a really good indicator. I use them quite a bit. But yeah, anyway, so if you want it at a cheaper price, go ahead and click the links down there and get you some. All right, Stitch Fix. Same thing. It's at the 21 EMA right there. What I would like to see in the 30-minute chart is a buy arrow form before going higher, because I don't like how it's stopping right there right now. But it may take off higher, so I'll be watching that one. And GSX. Now, I really liked this one as well, but I think it only has monthly options. But like, check that out. All the way up there. I don't even know what GSX is, honestly, and it's not saying it on here. Do you know what? Because it all looks kind of very similar to GameStop. Let's make sure it's not a sympathy move. It is Consumer Defensive Education and Training Services. Fair enough. I like it. All right, so that's a setup. I mean, that is just a clean pullback, right? Up, down, and then got your buy arrows, just trailing it higher. I just think that's a really good setup. And it no, it has weeklies. I thought it just had monthlies. Sweet. All right. All right, IRM, same thing. A lot of these setups are all the same. Shot up with all that volume, pull back to 21 EMA, looking for it to cruise up back higher. That's all I'm looking for. And I know it's the same setup over and over, but those are what that is offering. I mean, like, I don't know what else you would want from me. Okay, next are the squeeze setups. So I want to get my squeeze chart. What's going on here? I want to get this. I want to put it over here. here. Boom. Okay. All right, squeezes. I'm liking Tesla, obviously, because everyone likes Tesla. And why? So, weekly chart's bullish. The weekly squeeze is still firing. It's above the 8 EMA. Moving average is stacked positive, consolidating right here. Would like a dip to the 21 EMA to get it for a ride higher. That is what I'm looking for. But if this 195-minute squeeze fires to the upside, I may not get it. But that is something I'm willing to accept because I am not chasing. All right, Tesla next in tap, net tap. So these, I found all these on my. So this is a scanner that I have. It scans for stocks that have early in signals, are in a squeeze, and at the top 10% of their all-time highs. And so, as you can see, this one is really solid. So we have a weekly squeeze firing. It's above the 8 EMA. It's consolidating here. Have a low compression squeeze. The only thing of concern is the earnings date right there, which is... when is it? You want to tell me? So it says conference call on the 12th, earnings on the 24th. So take that for what it's worth. Anyways, looks like a solid setup for a squeeze, stacked EMAs, mixed per squeeze, bullish momentum, all time or 10% of his all-time highs, and early in signals. I mean, pretty solid setup there. And these ones that I'm going to show you, these other ones, I believe this is why I thought, like, okay, I'm looking at it on the other monitor. And this one does only have monthlies. Earnings is not in the way, but if you wanted to play it longer term, or if you're into the long-term credit spread type of thing, definitely obviously supports there. You probably sell the 38s for February or March and write it up. But anyways, squeeze going higher, stacked EMAs, early in signals, top 10% of its all-time highs. That's a good one. This one isn't as clean. As you can tell that this momentum still has to shift up. It's not as high as the other ones. But you do have a 195-minute squeeze right here, which may help change that. You do have earnings coming, but it's stacked EMAs, early in signals. Only concern is it kind of looks like a Head and Shoulders, like there, and then here. So all price has to do really is break that, and then we're going back down. Something to think about. But it's an option. I will more than likely not trade it, but I thought I'd bring it to your attention. All right, Keurig. I'm upset I missed this one too, but it does not have earnings. Oh yeah, it does. I am a liar, but it's not in the way. Earnings on this one is not till February 25th. But stacked EMA squeeze, stacked EMAs early in signals at all-time highs, mid-compression squeeze with bullish momentum. If we get a quick dip to the 21, maybe the 8, since early in signals are already happening for a move higher, I think that looks pretty good. This one's earnings might be in the way. Yep, that one's earnings are in the way. So we'll go ahead and skip that one. Forget I even offered that one. All right. American Eagle Outfitters. And yes, it is extended. Absolutely. But what I'm wanting is when I hit the support, hope maybe come back down to the 21 EMA. Because it has stacked moving averages. I've said mid-compression squeeze, momentum shifting higher. Over here on the weekly, it tested the 8 EMA that bounced right off of it with bullish momentum going higher. The 195-minute squeeze just fired is going higher, but I would like to, since the squeeze over here is already firing, it might be a good idea to catch it off that 8 EMA and ride it higher. But just have to wait and see what happens. Those are just possible ideas. And Best Buy. This one is not as clean as those others. I can admit that. But the EMAs are now stacked after breaking out, testing, and now we're going back up. It has a mid-compression squeeze. Earnings is coming. Yeah, earnings is... Come on, you gonna tell me? On the 25th. So if we could get a dip down and ride it higher, that's a possibility. Chewy. This is such a clean setup right here. One of my, so you did it right here, and then right here, and then, and if you're asking what was that sound again, and yes, it was. I'm not too sure about getting the dip because we did close at the highs. Usually that's a sign of going higher. But if we can get a dip down, I'm definitely looking to buy in this area. Definitely a buyer. We got a mid-compression squeeze, momentum going higher, stack the EMAs over here, stack the EMAs over here. Everything is just pointing higher. And that is Chewy. And Chewy has been a good trader since the whole COVID thing happened. I don't know how many times I've been in and out of that stock. And Peloton, I'm just watching to see how it acts. I don't really have a setup yet, obviously. I'm kind of just watching because that was a mid-compression squeeze. I'm waiting to see if it starts to turn around. It may not. At this point, it's hard to tell. If it closes below this 8 EMA, definitely opens the door to go down to 127. But, yeah, I mean, you can only wait and see. Yeah, so that is all I have. I know this video was kind of long. Was a roller coaster of a week. Started down like 3.1K, ended up only being down 1,000, which I could deal with. If you have any questions, please write them in the comments section. If you found it helpful, please share this video, comment, like, subscribe if you want to continue seeing more. And so yeah, thank you very much, everyone, and enjoy the rest of your weekend. Take care.